Shares of SoundHound dropped like a rock on Friday after news broke that Nvidia had sold its entire stake in the company. Now, SoundHound is a stock that I've covered a couple of times here on Asymmetric Investing in early December and early January. And one of the things that I warned is that the business doesn't really justify the valuation of the stock. It doesn't seem like there's any moat around the business. They're acquiring a lot of their revenue growth. And I don't see any reason that this isn't the kind of business that's just going to be competed away as artificial intelligence generalizes more and more. And one of the pieces of pushback that I always get with SoundHound is, well, Nvidia has a huge stake, so they must know something, right? Well, Nvidia no longer has that. So let's dig into exactly what we found out. This impacts not only SoundHound, but also a couple of other companies that were hot stocks in the artificial intelligence space. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right. So let's look at that 13F filing that SoundHound filed with the SEC. And you can find this in their SEC filings. This is actually their November 13F filing. So for the third quarter of 2024, I'll show why I pulled that up in just a second. But this is the one that came out on Friday. And this is not actually as of Friday's date. This is as of the end of 2024. And what you see here when you go down here just a little bit is the 5 companies that they have disclosed a position. The number to look at here is the number of shares that they own in each of these companies. Applied Digital, 7.7 million shares. This is one that has remained constant, at least over the past quarter. Recursion Pharmaceuticals, another one that has remained constant in the past quarter, but the rest of these have changed pretty dramatically. ARM Holding is down from about 1.9 million shares to now just 1.1 million. And these two, Previous and WeRide, are both new. So let's go back to this same filing. This is as of the end of the third quarter. So as of the end of September 2024. This is where you see SoundHound. SoundHound, they had 1.7 million shares worth about $8 million. They also held 3.7 million shares of Serve Robotics worth almost $30 million. That's another one that got absolutely destroyed on Friday. And the final one, a much smaller position, but NanoX Imaging, 59,000 shares. That one they have sold out of completely as well. So these three all gone from Nvidia's holdings, and ARM Holdings, which was a much bigger position, 280 million at that period of time, now down to about 1.1 million shares. So why in the world is Nvidia selling shares in these companies in particular? Nvidia doesn't talk a lot about the minority stakes that it takes in a lot of different companies, but I do think we need to think about what the incentives are for Nvidia. Nvidia doesn't necessarily just want to make money from trading stocks like this. It's really interesting that they have kind of bought and sold stocks relatively regularly in the artificial intelligence space. They actually want to build a customer base. They want to take a stake in a company like SoundHound and make sure that they're buying Nvidia chips. That's really the reason that they've made a lot of the VC investments that they've made, even some of the public investments that they've made, is they want to make sure that they have customers for their chips long term. If they're partnering with these companies, and that may include taking an equity stake, that means that they can build their own customer base by kind of having them under their wing. I think that's the way that I think about this, is that these investments are relatively small for Nvidia, generating about $100 billion per year from their data center chips. So if they take a small position in a company like SoundHound, and SoundHound builds its system on top of Nvidia chips, that's going to be a win for Nvidia, no matter what happens to that equity position.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
But at the end of the day, Nvidia owning or not owning shares of a company like SoundHound shouldn't be all that critical to your investment thesis. You should be looking at what the business is doing, and the business is not doing particularly well at all. Let's look at the company's revenue and net income. You can see here that over the past year, just $67 million worth of revenue and $110 million worth of losses. On top of that, a lot of that revenue has been acquired. So all that growth that you see is not organic growth for SoundHound. Now, what turns around the company's economics? It's very possible that this could become the go-to platform for restaurants or for car companies interfacing with artificial intelligence through voice commands. But how big is that market? And how big is that market going to be near term before the company needs to continue to raise more capital? I think that's fundamentally the question. And the economics are so bad today that this is not a sustainable business. That doesn't mean that the stock couldn't go up even further. but it also means that there is massive risks if you get even just a little bit of bad news, like Nvidia selling their shares. And even after this sell-off, the valuation is a little bit crazier. Enterprise value to sales is nearly 6. Price to earnings multiple is massive because they don't have any earnings, so it's actually negative. Now, the interesting thing is that all three of these companies fit this same profile. NanoX Imaging, company with a $400 million market cap even after the drop in the stock. And yet, look at the company's losses compared to their revenue. Enterprise value to sales is about 32. So extremely expensive company, has not proven the ability to actually make a profit. And we don't really know why Nvidia took a position in the first place. The other one is Serve Robotics. Serve Robotics is a really interesting company, makes his little delivery robots. Very possible that that's going to be a fairly big business in the future. But is it big enough to justify the company's $600 million valuation even after the recent drop in the stock? If you look at their financials, basically still a pre-revenue company. So we have no idea what the company's economics look like. This could be a potentially good speculative play, but buying shares just because Nvidia made some sort of investment in the company, I think that's pretty unwise for investors. So I know that Nvidia gets a lot of attention for what kind of companies they're invested in, whether that's companies in the open market or in the VC market. But keep in mind that Nvidia is not playing the same game that you and I are. Nvidia is ultimately trying to grow its chip ecosystem and its software ecosystem. Companies that are willing to adopt that are the kind of companies that Nvidia would be willing to make some sort of equity investment in. But that's a means to an end. And they ultimately want to grow their core business, not necessarily just make money on those equity positions. We have seen this throughout history. Big companies have made partnerships with smaller companies. That often doesn't work well for investors who are just following those big companies, but they're really the power players here. And there's probably some sort of different motivation than you and I would have as investors. So SoundHound is the one that has dropped significantly since I published those two videos. Over the past couple of months, shares are down about 35%. And from their peak, shares are down 55%. So investors who were chasing this in part because Nvidia was buying into SoundHound have just gone after the wrong investment. So that's something I hope that everybody can learn a little bit from. Unless something changes significantly, it certainly doesn't look like SoundHound has a really great future fundamentally. Now, I'm willing to change that opinion if their revenue growth picks up, if their organic revenue growth picks up, and if they get to profitability or positive free cash flow. But we're nowhere near that in their operations today. So I'm going to take a very, very skeptical look at this company, no matter what Nvidia did with their shares. So let me know what you think about SoundHound, Serve Robotics, and NanoX Imaging after Nvidia sold their shares. Are these stocks that you're in? Are you getting out of them now because Nvidia is out as well? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.